Welcome to Financial Foundations, your monthly market roundup filmed right here in Vermont, where the pace is slower, the maple's sweeter, and community still comes first. I'm Dom, this is Steve. We're two local fiduciary planners here to help you cut through the noise and focus on what really matters, the financial decisions that impact you, your family, and your community.
And this month, we're digging into three big issues: rising prices tied to new tariffs, shrinking support for local nonprofits and media, and what this summer's flooding means for Vermont families. We'll also break down what the new federal legislation, the Big Beautiful Bill, means for your taxes, healthcare, and retirement. And speaking of retirement, when markets are relatively stable and trending upward, they often fade from the headlines. That's just how it goes. Volatility makes news, and steadiness rarely does. So that said, just because the headlines are quiet doesn't mean nothing's happening. Under the surface, there's always movement, and it still matters for everyday Vermonters. So before we jump into the three big stories we're tracking this month, Dom, can you give us a quick pulse check on what the markets are doing today?
Absolutely. While a lot of headlines have focused on rising costs and policy shifts, the markets themselves have actually been on a pretty solid run. In fact, several major indices hit new record highs in July. And this was driven by strong earnings from tech and continued investor optimism. If you've checked your 401k balance recently, you might have seen it ticking up, and that's no accident. Sectors like technology, consumer goods, and even parts of healthcare have posted strong results this summer. That's helping to lift the broader market. Volatility, meaning those sharp ups and down swings that we see, has become a little calmer than it was earlier this year, which gives some folks a breather. But it's important to remember volatility feeds on uncertainty, and big policy decisions, global tensions, and pricing shifts are still unfolding. The calm might not last forever. Energy markets, for example, are holding steady for now. But when overseas conflicts and tariff changes in the mix, oil prices could be one surprise away from spiking.
So Dom, what's driving it?
Great question, Steve. It's a mix of steady corporate profits, easing inflation, and expectations that interest rates may start to come down later this year. It's a good reminder that staying invested through the noise often pays off, especially for long-term planners. And moving into our first headline, prices, like we said, are heating up again. Tariffs on those imported goods kick in August 1st, and we're already seeing the effects here in Vermont. Heating is a great example of how fast costs can shift and how a little planning can go a long way. I use pellets to keep my house from freezing in the winter, instead of using all that oil. Luckily, I stocked up back in June, but that same product, same exact brand of pellets, would cost me an extra 25% today, just a few weeks later. And that's a big difference for the same fuel, and could be a real hit to a budget for a lot of families. On the flip side, I've also been working on installing a heat pump. With the way our seasons have been getting more unpredictable, freezing one week, muggy the next, it just makes sense. It helps both heating in the winter and cooling in the summer, which is becoming more a need than a luxury in Vermont.
It is.
And here's the kicker. Those incentives that help make heat pumps more affordable are already starting to phase out. So if it's something you've been meaning to look into, now's a really good time. Whether it's through Efficiency Vermont or federal tax credits, those programs are still out there, but not forever. There is good news, and that is that there are some steps you can take to help position yourself here. So you can revisit your spending every few months to see what's changed. If you're planning a big purchase, you can do your homework on price trends and availability. Sometimes getting that item now instead of later, especially when you throw tariffs into the mix, can be better on the wallet. You could also compare quotes and rates, especially on financing and saving. And you always want to try to pad that emergency fund, even a little bit. Skipping the coffee out once or twice a week and throwing that into your savings could help you down the road. Unexpected costs are always on the rise. These small actions can help protect your plan and reduce stress when prices don't behave.
Thanks, Tom. Let's take a look at our next headline, cuts to nonprofits and public access media. This summer, several federal grants that support nonprofits and local media are facing cutbacks. That may not sound personal, but it is, especially in places like Rutland County, where organizations like Meals on Wheels, Brock, and yes, PEG TV rely on blending funds to operate. So when one source dries up, the pressure shifts, often landing on local donors and volunteers. So if you want to help, you don't need to make a huge gift. Here are a few ways to start making an impact. Switch from one-time gifts to monthly giving. It helps nonprofits plan better. Consider using a qualified charitable distribution from your IRA if you're over 70 and a half years old. This may have some potential tax advantages for you. Donate appreciated stock to reduce capital gains taxes while supporting your cause is another consideration. And if money is tight, your time matters. One afternoon a month can go a long way. And supporting our community doesn't just mean showing up, it means being purposeful, not just in a crisis, but in the everyday choices that we make. Dom and I do our best to practice what we preach. Each week, we're out in the community, whether it's volunteering at the local hospital or helping out at the food co-op, because giving back isn't just something we talk about, it's something that we've intentionally made part of our planning.
Exactly, Steve. I really love my time at the hospital as a volunteer. The air conditioning in the summer there is also really nice. However, we don't always get beautiful weather here in good old Vermont. We're seeing something become a summer tradition that nobody's asked for. For the third year in a row, flooding has hit parts of Vermont hard, especially in and around Montpelier, Barre, and Londonderry. We've seen roads washing out, homes getting flooded, and families are left to pick up the pieces and deal with the costs. But it's not just about weather, it's about planning. Many homeowners still don't have flood insurance, and most basic policies don't cover it. Federal disaster funding is shrinking, recovery takes longer, and is more expensive. Steve, you started your journey specializing in insurance. What are some thoughts you have on this and some tips for folks at home?
Sure, Dom, let's talk about that. So if you live near a floodplain or even near a brook that didn't used to be a concern, it's time to get prepared. So start with your insurance. Review your coverage, and not just for what's included, but what's not included. Most standard homeowners policies don't cover flood damage, and many Vermonters are surprised to find that out too late. So you'll also want to know your deductible. That's the part of the claim that you have to pay out of pocket before insurance kicks in. If your deductible is, let's say, $1,000 or $2,500, that amount could be set aside in your emergency fund. The insurance company won't cover it, so you're going to want to make sure that you can. Next, building liquidity, like you talked about with that emergency fund. Ideally, 1 to 2 month buffer of accessible cash. If you're evacuated or displaced, you'll need to act fast without waiting on paperwork or approvals. And here's a tip I learned early in my insurance days. Take photos of your valuables, keep receipts when you can. It's easy to keep a digital folder on your phone, or cloud storage works great as well. The documentation can make the claims process much smoother, and it's often required. Lastly, create a small Go folder, copies of your IDs, prescriptions, key account information, and anything else you'd need if you have to leave quickly. These aren't doomsday steps, they're just good habits. And in Vermont and how things have changed in the past few summers, good habits can go a long way toward that peace of mind.
Heck yeah, Steve. You know, it's so much fun when we get to talk about the stuff we're passionate about, though it is stuff my wife would say we're planning nerds about. But moving into our concept corner. This is where we take a somewhat complicated idea and try to simplify it for everybody at home. And this month, we're going to be looking at the question, how do you build a financial plan that works in a world like this? Steve, do you want to offer any insights?
Sure. So I would start with 3 core habits. Control what you can, your spending, your savings, and your timelines. Prepare for what you can't, emergencies, rate hikes, things like weather. Stay aligned with what matters, not with what's trending, what's actually meaningful to you. So if you haven't had someone walk you through those questions with you, someone who doesn't work on a commission or trying to sell you something, it might be time to ask. Real planning is about clarity, not complexity. And sometimes the simplest questions lead to the strongest answers.
Man, I really love talking about this stuff, Steve. I may not appear outwardly excited, but I am very pumped about this. I could flip this table. I won't because it's not our table. Life, isn't just like a box of chocolates. It's also a puzzle. And trying to figure out how those pieces fit together is one of the greatest parts about what we do and why I couldn't hope for a better role in the community. But I do want to get a little bit serious about the next segment, which is our policy deep dive. So as we all may know, the big beautiful bill was signed into law on July 4th, and it's definitely a whopper. Our time is limited on our show today, so we're going to talk about 3 of the top things to come out of the bill. It's important to know these aren't the only 3 things or the most important 3 things. They're just 3 things that we want to point out and talk about today. So one of the largest changes is impacting Medicaid and CHIP, which is Children's Health Insurance Program. These are some interesting hurdles coming down the stream for those programs. Sometimes people are using them and they don't even know they are. A good example is Vermont Health Connect and the insurance premium credits that folks get. Steve, do you mind reminding us about Medicaid, CHIP, and Medicare and what these changes actually mean for Vermonters?
Sure, Doug. Let's talk about Medicaid first. So Medicaid is health coverage for low-income Vermonters that includes adults, people with disabilities, pregnant women, and seniors who need long-term care. CHIP, which in Vermont is part of Dr. Dinosaur, covers children and teens in working and middle-income households, even if their parents don't qualify for Medicaid. Then you've got Medicare. Now, this is federal health insurance for people 65 and older, or for those under 65 with qualified long-term disabilities. This one's going to be felt in every corner of the state, but especially in rural areas where access to care is already stretched. Families, part-time workers, and those navigating job transitions are at risk of losing coverage if they miss a form or if their income changes slightly. And it's not just working families. We've heard from Vermonters who are retired or living on Social Security disability who are worried too. If your income is fixed but right near the cutoff, or if you're on Medicaid due to disability, the added paperwork and eligibility checks could create barriers to staying enrolled, even if your health needs haven't changed.
Thank you, Steve. What can people at home do about that?
Well, first, I would review your income reporting and make sure your paperwork's up to date. If you've gotten help from a case manager or a navigator, reach out early. And if you're unsure whether you'll still qualify, now is the time to explore a backup plan or a secondary coverage option, before the system gets more strained.
I think that last part should be emphasized. Thank you, Steve. That has been very helpful. I'm sure a lot of folks at home really appreciate those insights. On to the next piece of the big, beautiful bill we want to talk about today. That has to do with the new temporary tax break for things like tips, overtime pay, and even auto loan interest. It's gotten a lot of attention. There's a lot of confusion and mixed thoughts on that. That's why we want to cover some of the fine print details here. Steve, if you don't mind breaking down what that actually means for Vermonters and what we should be thinking about, I would be very thankful.
Absolutely, that's what we're here for.
Yep.
So here's some important things to know. You don't have to itemize your deductions to qualify for the new tax break. That surprises a lot of folks since most tax benefits require extra paperwork, but this one works even if you take the standard deduction. So as long as you qualify and report everything properly, you can still claim it. And for a lot of working Vermonters, especially folks in restaurants, manufacturing, healthcare, and public safety, this could be a real benefit. It's not automatic though, so each part of it has its own rules. So here's what to know. Let's start with tips. So this applies to tips you report through your employer. If you're paid under the table or you don't log your tips, they won't count toward the deduction. Overtime pay next. Only the extra pay you earn from working 40 hours, beyond 40 hours qualifies, not flat bonuses or regular wages. And it needs to be clearly listed on your W-2 to be eligible. So documentation, again, is important. Let's take a look at auto loan interest. So this one's a bit different, and it only applies to interest on a loan for your primary vehicle, and only if the loan meets certain rules. So for example, leases or refinance loans may not qualify. And if you're hoping to claim this, now's the time to start keeping records. Keep clean pay stubs, loan statements, and anything your employer reports on your income. And if you're not sure whether you qualify, talk to a tax preparer or a planner early. It's better to go in informed than miss out or make a mistake.
This sounds like our tax preparers are going to be pretty busy this coming year.
They always are.
Thank you for that, Steve. But I heard each of those have different income caps and requirements.
Okay, well, let's talk about that. So the tips and overtime. The income cap is $90,000 for an individual, and the maximum deduction is $12,000. Auto loan interest deductions start phasing out at $100,000 for individuals. So if your income is over that, you might not be eligible, or your deduction could be reduced. Now, the amounts for married couples are higher than that, so check into those. All right, Dom, what's our last headline?
You betcha. So the last piece of the bill that we want to highlight today is the new tax break for retirement income. But as we've seen with most things in the tax code, it does come with a few caveats. Steve, do you mind walking us through what that means for Vermonters who are retired or approaching retirement?
Sure, Dom, let's take a look. It is a win, even though it's just a temporary one. For a retired couple under $150,000 income, this could mean up to $12,000 of retirement income is shielded from taxes. That's real relief, especially for those drawing from their IRAs. But since it's set to expire and phases out with higher income, it might be time to think strategically about those income sources. For example, retirees could consider accelerating withdrawals from tax-deferred accounts while the deduction is available, or explore Roth conversions while staying under that threshold. That's important.
Yeah, I love Roth stuff.
It's also a reminder to revisit your income plan each year, not just at tax time. Timing and income levels matter more now than ever with short-term policy changes.
Yeah. Thank you for that, Steve. Really appreciate your insights there. That is the rest of the headlines. So now we're going to move into our Community Corner segment. July has been a huge month for community education. Our estate planning essentials series in Bennington and Rutland drew record attendance for us. We helped answer a boatload of questions, that's the scientific term, for a lot of different people. I really love educating. That's my favorite part of the job, and one of the reasons why we actually have our show here on PEG TV.
Yeah, I couldn't have said that better. And we're keeping it going in August with 3 more events. Let's take a look. We're talking about smart tax planning on August 4th at the Castleton Community Senior Center. We have tech tips for retirees on August 19th at the Godnick Center right here in Rutland. And we're also doing a session on navigating financial hardship on August 28th at the Young at Heart Center in Poultney. And all of these events are free, and we truly believe in strengthening the community by helping build financial literacy, knowledge, and skills.
Darn right we do, Steve. Darn right we do. Thank you all for sticking with us to the end of our show. Again, I'm Dom, and this is my partner, Steve. We're a couple of local advisors doing our best to build a stronger community. And as we wrap up this episode of Financial Foundations, we just want to express our sincerest thanks not only to you, the viewers at home, but to the PEG TV team for helping us produce this show. From rising costs to rising waters, the summer's been a reminder that the unexpected isn't the exception, it's the rule. But with steady habits, good planning, and support you trust, you can move forward with more confidence, even when things feel uncertain.
Yeah, and it's always nice to hear from folks that have seen us on this show or out in the community, whether it's something we've covered today that sparked a question or a comment, or there's something else on your financial plate. We're always happy to talk about that.
So until next time, take care of yourselves and take care of your neighbors. I'm Dom Stillwell.
And I'm Steve Morneau. We'll see you next time on Financial Foundations.